You are being charged for bills you legally do not have to pay right now, this month, and nobody sent you a letter about it. Nobody called you. Nobody knocked on your door and said, hey, by the way, that money you just sent, you did not owe that. I am Andre, and today I am going to walk you through 7 bills that millions of Americans over 65 are overpaying every single month, not because they are careless, not because they are not smart, but because the system is not exactly motivated to remind you. The moment you understand number 3 on this list, I promise you, you are going to say the exact same thing every single person I have shared this with says. They say, why did nobody ever tell me this? Now, before we get into the list, I want to ask you something. When is the last time you actually looked at a bill you pay every month and thought, wait, am I legally required to pay this full amount? Most people never ask that question. You get the bill, you pay the bill. That is the system, right? But here is what I have learned talking to seniors across this country. The people who are keeping the most money in their pockets are not the ones who earn more. They are the ones who ask one extra question. And today I am going to give you the questions you should have been asking years ago. But first, do me a favor. If you are over 65 or if someone you love is, share this video right now before we go any further. Because by the time we get to number 7, I guarantee you are going to wish you had seen this sooner. Let us start with the big one, your federal income tax. And I need you to hear this carefully because I am going to tell you about something that went into effect in 2025 that your tax preparer may not have mentioned. It is called the Senior Bonus Deduction. Starting with your 2025 tax return, if you are 65 or older, you get an extra $6,000 deduction stacked on top of everything you already have. If you are married and both of you are 65 or older, that becomes $12,000 extra just sitting there. It does not replace your standard deduction. It does not replace the extra senior deduction you already had. It stacks on top of all of it. Now, here's the part that should make you put down whatever you are doing and pay attention. If you are living mostly on Social Security and a small pension, stacking all of these deductions together may bring your federal tax bill to exactly $0. Not lower, 0. And you are sitting there every April handing money over that you never owed in the first place. That is not an accident. That is just nobody telling you the rule changed. If someone else prepares your taxes, ask them directly before this year's return is filed. Ask them specifically, did you apply the senior bonus deduction for 2025? If they hesitate, if they look uncertain, that hesitation right there is your answer. Now let us talk about bill number 2, because this one quietly drains money from people who think they are being responsible. When you first signed up for Social Security, you were handed a form called the W-4V. That form lets you choose how much federal tax to withhold directly from your monthly check. 10%, 15%, 22%. Most people picked the number, thought they were being smart about it, and never touched that form again. Years went by, income changed, life changed. But that withholding, still sitting there every month, pulling money out of your check before it even reaches your account. Here's the actual rule you need to know. If your total combined income, meaning your adjusted gross income plus half your Social Security benefit, falls below $25,000 as a single person or below $32,000 if you are married, 0% of your Social Security is taxable. Not some of it, none of it. But you are still having money withheld every single month based on a decision you made years ago. You are giving the federal government a free loan out of your own retirement check every month. The fix is one form, the W-4V. You download it from ssa.gov, fill it out in about 5 minutes, mail it in, and your next check reflects the change. That is it. One form could be worth over $100 a month back in your pocket, and it is sitting on a government website right now, waiting for you to find it. All right, I need to stop here for a second because we are about to get to number 3, and I want to be honest with you about something. When I tell people about number 3, the first thing most of them say is, Andre, that is probably not for me. I make a decent income. I have a nice home. I do not think I qualify. And every single time, they are wrong. That assumption has been costing people hundreds, sometimes thousands of dollars every year for no reason at all, and the county is not going to correct them. Because every dollar you save is a dollar they do not collect. Stay with me. Bill number 3 is your property tax. And before you convince yourself this one is not for you, I need you to hear about something called an age-based assessment freeze. Here is exactly how it works. Once you turn 65, in many states across this country, your home's assessed value is frozen at whatever it was the year you hit that birthday. Your home can go up in value by 20, 30, even 50% over the next decade. Your tax bill does not move. In Texas, Once you turn 65, the school district portion of your property taxes is capped at the level from the year you turn 65. Your home can triple in value. That school tax bill stays right where it was. No income test, no savings limit, no financial review. You qualify because of your age. Period. Florida, Arizona, Colorado, Illinois, New York, and dozens of other states have similar programs. And according to research from AARP, roughly 92% of seniors who are eligible for property tax relief never apply for it. Out of approximately 9 million eligible homeowners, only about 8% actually file. The other 92% are writing a check every year for a bill that the law says they do not have to pay in full. Why does your county not track you down and explain all of this? Because they have zero financial incentive to do that. Every dollar of relief you receive is a dollar of revenue they do not collect. They are perfectly happy waiting until you figure it out yourself. You find out by making one phone call to your county assessor's office. Ask 2 questions. What senior property tax relief programs do you have for homeowners over 65? And which of those programs have no income limit? 2 questions. That call has been worth hundreds of dollars every single year to people who assumed for years they did not qualify. Bill number 4 is the one that catches people in the first years after retirement, and it makes me genuinely frustrated every time I see it because it is so preventable. Your Medicare premium surcharge. Here is the trap. Medicare calculates your premium based on your income, but not your income from this year, from 2 years ago. Read that again. 2 years ago. So if you retired last year and your income dropped by 40 or 50%, Medicare is still charging you a surcharge based on the salary from your last full working year. You are paying a premium based on money you stopped earning before you even enrolled in Medicare. And because that surcharge comes out of your Social Security check as a quiet monthly deduction, most people just pay it month after month without ever questioning whether it reflects their actual financial situation. There is a form called the SSA 44. You file it with the Social Security Administration when you have had what the government defines as a life-changing event. Retirement is specifically listed on that form. You file it, you attach documentation showing your income has dropped, and Medicare recalculates your premium based on where you actually are financially right now, not 2 years ago. Most people pay that inflated surcharge for months or even years before they ever hear about this form, because Medicare does not send you a letter when your income changes. They just keep collecting. File the SSA 44. It is free. It takes about 20 minutes, and it could put $200 or more back in your pocket every single month going forward. Now we are at the halfway point, and I want to ask you something directly. How many of these first 4 have you been paying without knowing you had options? Drop a number in the comments right now. Just a 1, a 2, a 3, or a 4. Because I want to know how many people watching this right now are sitting on money they did not even know they had. And I promise you the comment section is going to surprise you when you see how many other people are in the exact same situation. Bill number 5 is your Medicare supplement premium. And this one is not about government forms or age requirements. This one is purely about information that nobody bothered to give you when you first signed up. Here's something most seniors genuinely do not know. If you have a Medigap Plan G with one insurance company, and your neighbor down the street has the exact same Medigap Plan G with a different insurance company, the coverage is identical. Federal law standardizes it. Every Plan G covers the same things regardless of which company you bought it from. The only difference between them is the monthly premium, and that difference can be $60, $80, even $100 a month. Same coverage, completely different price tag, simply because you signed up with one carrier years ago and never once compared. Most people pick a plan at 65 when they first enroll, set up automatic payments, and never look at it again. Meanwhile, the premium has gone up every single year, and there are carriers in your zip code right now offering the exact same plan for significantly less. Go to Medicare.gov and use the Plan Finder tool, or call an independent Medicare broker, not one who represents only one company, and ask them to run a side-by-side comparison of every carrier offering your plan letter in your area. That one conversation has saved people over $700 a year for the exact same coverage they already have. Bill number 6. This one I want you to really sit with for a second. Every year, millions of seniors walk into a chain tax preparation office and pay somewhere between $200 and $500 to have a retirement tax return completed. And a significant number of those people legally qualify to have their same return prepared for completely free by IRS-trained volunteers. It is called tax counseling for the elderly, federally funded, specifically designed for taxpayers who are 60 years old and older. The volunteers who staff these locations are trained specifically on the tax questions that come up in retirement. Social Security income, pension distributions, IRA withdrawals, the Senior Bonus Deduction we already covered. These are not general preparers who occasionally see a retirement return. They specialize in exactly the situations you are dealing with. The largest provider is AARP Tax Aid, thousands of locations across the country. You do not have to be an AARP member to use them. A standard retirement return with 2 Social Security checks, a pension, and the standard deduction is not a complicated tax return. The chain preparer charging you $300 for 45 minutes of data entry is not providing $300 of specialized value on a straightforward retirement return. You are paying out of habit. This year, look up the nearest location at irs.gov or aarp.org. Keep that $300 in your own pocket where it belongs. And bill number 7. This is the one that almost everybody forgets to check, your utility bill. Most people hear utility assistance and immediately think that is for people in serious financial hardship. That is not always the case. Many states have senior-specific utility discount programs that are completely separate from standard assistance programs and have higher income limits than most people expect. Programs in California, New York, Texas, Florida, Pennsylvania, and nearly every other state offer monthly bill discounts, credits, or weatherization assistance specifically to qualifying seniors. Some of these programs reduce your monthly bill by 20 to 35% automatically once you enroll. And enrollment is one phone call or one online form. Here's exactly what you do. Call your utility company directly. Ask them to tell you every discount program, senior rate, and assistance program that is available on your account. Most utility representatives will not bring this up on their own unless you ask. But the moment you ask, they are required to tell you what is available. That one question has lowered monthly utility bills by $40, $60, sometimes $80 a month for people who had no idea the discount even existed. Now here's the one idea I want you to carry out of everything we covered today. Every single one of these 7 bills, the Senior Bonus Deduction, the Social Security withholding, the property tax freeze, the Medicare surcharge, the supplement premium, the free tax preparation, the utility discount, not one of them comes back to you automatically. The system does not send you a check because you qualify. It waits. It waits until you ask. Being legally entitled to relief and actually receiving it are 2 completely different things. The gap between them is one phone call, one form, one question you did not know to ask until right now. So here's what I want you to do this week. Pick one item from today's list, just one. Make the call, fill out the form, ask the question, and then come back here and tell me in the comments which one you went after and what happened. Because I read every single comment, and your story might be exactly what someone else watching this needed to finally pick up the phone. If this video gave you something real today, share it with one person in your life who is over 65. Not because they are struggling, but because the odds are very good that they are overpaying at least 2 or 3 of these bills right now, and they have no idea. Hit subscribe because this is exactly what this channel is here for every single week. I am Andre, and I will see you in the next one.